The Australian stock market suffered its worst day in 3 months yesterday. $50 billion was wiped off the ASX as the US Federal Reserve announced it would halve the number of interest rate cuts in 2025. Will the sell-off continue? Joining me live is Moomoo's Chief Commercial Officer, Michael McCarthy. Michael, thanks for your time. We were watching this huge sell-off in real time on the show yesterday. It seems to have slowed down a little bit overnight and this morning. What's your reaction to world markets readjusting to their borrowing expectations in the US?
Well, Kenny, thank you. I think that one of the key factors here is the adjustment of expectations. As we know, share markets price what they think is going to happen in the future, not what's happening right now. And that change in the outlook for interest rates rattled markets right around the world. The selling that we saw in the US flowed straight into our markets. It was a tough day at the office for Australian investors yesterday, and that selling hit every market across the Asia-Pacific region and flowed into European trading as well, where major markets were down 1 to 2%. Now, you're absolutely right. We have seen a little steadiness in the US trading this morning. Most of the indices just in the green, and that is good news. But that change in outlook, I don't think has been fully priced as yet. And the reality is we might not even get 2 rate cuts in the US if inflation remains as sticky as it has been. So that's something for investors to ponder over the break. The reality is that we might see further taking back of that optimism in markets. And given that we're at all-time highs or very close to in most cases, there is potential for further corrections in the short term.
Oh, OK. So you think there's a lower chance of seeing some Christmas green. You think the sell-off may continue?
Yes, and I think that's part of it. The expectation that we get a Santa rally, as it's being called, and a positive market close for the year, I think had people positioned for it and perhaps even a little complacent. Now that their cage has been rattled, they're readjusting their portfolios as they must given this new news, and that readjustment could continue into the new year.
What takeaway will the RBA have from the markets this week and the Federal Reserve? What are they going to respond, do you think?
Well, among traders, there's a raging debate about central bank actions globally. In the wake of the GFC and then the pandemic, we saw globally coordinated action from central banks, and the expectation has arisen that they will continue to coordinate. And yet a number of central bank speakers have made it clear that they're now following their own path. And so, for example, we have a tightening bias in Japan versus an easing bias in the US. And I think we're likely to see more of that. For the RBA, that means the RBA will be much more attuned to local data and particularly local inflation and growth numbers rather than worrying too much about what other central banks are doing.
What do you think inflation could do here? Do you think it could reverse and start going back up in 2025, or do you think there's a good chance it'll keep moderating?
Well, that's what the monthly numbers are showing at the moment. We've actually seen a slight uptick in inflation, and particularly at the core level, which is obviously the focus for central banks. And we saw a similar situation in the US. Now, this is not what markets were expecting. We were looking for that continuing drop from the post-COVID peaks to take us back to target levels for inflation. But that doesn't seem to be happening at the moment. And it's the key question for investors. Will inflation remain sticky and at higher levels, effectively tying the hands of central banks and meaning that there's no longer a central bank put under share markets?
OK, Michael McCarthy, appreciate your thoughts this morning. Thank you.